Are you sick and tired of getting shafted by your bank with their meagre interest rates? Fed up with being paid a pittance on your cash deposits? Well, I have some news for you. Compound finance could be the solution you're looking for. My name is Guy, and today I want to talk about one of the hottest lending platforms to come out of the DeFi space. In this video, I'll go over what compound finance is. I'll also take a look under the hood of the platform to give you a basic understanding of how it works. And finally, I'll show you how to get started on compound finance in my step-by-step walkthrough. And don't forget to stick around till the end if you want to hear my thoughts on why I think platforms like compound finance could play a major role in crypto adoption and lead to some obscene inflows in the crypto space. Now, before I get this show on the road, there are a few quick disclaimers to get out of the way. Yes, I may be your crypto guy, however, I am certainly not your financial advisor. These videos are made for educational purposes only and are certainly not financial advice. Also, for those of you who've landed on the channel for the first time, welcome to the Bureau. If you get any value from this video, I'd appreciate it if you could smash that subscribe button and flick that bell. Follow those 2 brief steps and you won't miss another one of my crypto videos ever again. Okay, let's now dive into compound finance. According to the authors of the white paper, compound finance is a, quote, decentralized protocol that establishes money markets with algorithmically set interest rates based on supply and demand, allowing users to frictionlessly exchange the time value of Ethereum assets. Now that's a mouthful and a half. Put simply, all that compound finance does is match those who want to borrow money with those who want to supply money to earn interest. Yes, it's a little more complicated than that, as the money we're talking about here is Ethereum-based assets. As things stand right now, you can lend or borrow Ethereum, DAI, USD Coin, Augur, Psi, which is legacy DAI, wrapped Bitcoin, BAT, and 0x. If you're not sure what DAI is, it's a stablecoin that's been created to hover around the $1 price point and is used instead of US dollars on many DeFi platforms. If you want to learn more about this cryptocurrency, then just click the video right here. Now, it would be wrong of me to stand here and give you the impression that compound finance is the only DeFi lending platform out there. A cool website that I like to use is loanscan.io, which tells you the different interest rates for DeFi lending platforms. Naturally, as a savvy saver, I like to get the best possible deals and balance that against platform reputation. You can see that compound finance is one of the higher paying loan platforms for DAI stablecoin, with interest returns sitting at over 8% per year at the time of shooting this video. A quick look at people's favorite DeFi website, DeFiPulse.com, will show you that Compound is actually the second biggest project in terms of USD value locked on the platform. Over $150 million worth of Ethereum-based stock is locked on Compound Finance. That's not too shabby at all. To put that another way, crypto holders have trusted Compound with over $150 million. On Compound, an astonishing $36 million worth of loans were created within the last month, with outstanding loans being a cool $41 million. And loan repayments hit around $25 million in the last 30 days. Now that's some serious lending platform action. The astute among you might have noticed that DAI makes up the lion's share of the lending action on Compound. The reason why is quite simple. By lending out DAI stablecoin on the platform, you get double the interest rate of the next highest yielding Ethereum-based asset. Before I move on, yes, 8% per year doesn't sound like much when us crypto guys are used to daily swings of 20% or more. However, I just want to take a moment out to show you how insane an 8.07% return per year actually is. Let's say I jumped into my time machine and brought back Guy Jr. to 2020. Little Guy is 20 years old and has $2,500 to invest. Let's assume the government keep their word and allow Guy Jr. to retire at 65. $2,500 at 8.07% interest rate compounding over 45 years would result in a lump sum of $93,000 when he retires. In other words, close to 40 times. The point here is that 8% interest compounds very nicely indeed. Although The truth is, no one knows exactly what that $93,000 would buy you in the future. Now, if you're excited about the idea of compounding your way to $1 million, I would urge you to hold your horses. There are a few more things I would like to share with you. The simple way of looking at compound finance is that you're depositing Ethereum-based assets like DAI, making interest like you would at a bank, and eventually withdrawing those assets, your initial deposit plus interest. I know it's not necessary to know about cTokens, however, I think it's super important for anyone who's thinking of using a platform like compound finance to have a solid understanding of what's happening behind the scenes. So, why is this important? Well, the truth is that the current crypto landscape is one in which we need to trust developers and strangers with our funds. To me, that's not what crypto should be about. Instead, it's about self-responsibility, self-reliance, and freedom. A massive part of achieving this is for regular people like you and me to have a solid understanding of what's happening behind the scenes at these platforms and know what's happening to our money. Sure, you could choose to run into the crypto forest blindfolded and be steered by hype. However, those that got wrecked by the likes of BitConnect will tell you that this is not a good idea. If you're not interested in knowing what happens in the background of compound finance, then feel free to skip forward. But if you want a basic understanding of what the heck is going on, I'm going to explain what cTokens are. Before I made this video, I got myself 17 and a bit DAI stablecoins. Here's the Etherscan transactions in this dummy wallet. You can see 17 and a bit DAI stablecoins coming into the wallet, the same amount of DAI going out to compound finance, and over 850 cDAI coming back into the wallet. So what the heck is going on here? Well, I loaned out 17 DAI on compound finance, and compound sent back over 850 cDAI to me. Now, this is still confusing because all I wanted to do is loan out 17 DAI, earn interest, and now compound has sent me back a seemingly random amount of tokens. Well, the first thing to know is that cDAI acts as a redemption token to redeem the actual DAI. You can think about these cDAI tokens like old school United States silver certificates. Let me explain. So before our fiat monetary system, the US dollar, along with almost every other currency in the world, was just the promise to pay the bearer of the note real money. In other words, gold and silver. Holders of a $1 silver certificate could literally walk into their local bank and exchange the $1 bill for $1 worth of silver. To put that another way, US currency could be redeemed for gold and silver. The same is true for cDAI. These cDAI tokens can be redeemed for actual DAI stablecoins. With any Ethereum-based asset on compound finance, the same logic holds true. There is cETH, cWBTC, cUSDC, and so on. You can find the currency exchange rate of these cTokens on the Compound Finance website by going to cTokens at the top of the page and scrolling down to the bottom. You can now see that 1 cDAI is equal to around 0.02 DAI. So that's why I got back around 850 cDAI for my 17 DAI stablecoins. So the thing to know is that if I rocked onto Compound Finance later, then I'd actually get a little less cDAI for my 17 DAI coins. Sounds like Compound are pulling the cDAI or cToken rates right out of thin air, right? Well, not so much. cTokens are designed to increase slightly after every Ethereum block generated. This is how interest is generated on the platform. The number of cDAI tokens you will have will always remain the same. However, the cTokens are designed to increase in value and you should be able to cash them out at a higher rate in the future. When I look at the Compound Finance interface, it looks like I have 17 and a bit DAI. However, what's really happening behind the scenes is that I'm holding around 850 cDAI that's been converted at the current exchange rate into DAI stablecoin to generate my supply balance. So, in a nutshell, there you have the basic mechanics of Compound Finance and how it works. It's also super important for anyone using Compound Finance to know that cDAI tokens in your Ethereum wallet are not from a worthless airdrop. Instead, they are redemption tokens and represent your claim of real DAI stablecoins on Compound Finance. So, the question is, do you want to use Compound Finance to get some of that sweet, sweet interest? If the answer is yes, I'll now show you how to get set up and going on the platform. To start, head over to compound.finance and click the Markets button at the top of the page. You'll then be taken to the market overview page where you can check out the interest rates available for different Ethereum-based assets on the platform. If you're cool with the exchange rates on offer and want to lend out DAI, then make sure you have some in your Ethereum wallet with a little ETH for gas. You can pick DAI on a plethora of different exchanges. However, I'd recommend sticking to places like Kraken or Coinbase Pro if you want to go down the centralized exchange route, or Kyber if you want to use a decentralized exchange option. Next, you want to click the App button in the top right-hand corner. This then prompts you to connect your Ethereum wallet to Compound Finance. You can use the Coinbase wallet, Ledger, or MetaMask to get this done. If you own a Trezor, you can pair this hardware wallet device with MetaMask to connect to Compound. If you're like me and have a Ledger, then make sure your hardware wallet is plugged into your computer with the Ethereum app open. Make sure that contract data and display data are enabled with your Ledger Ethereum app. Just pop over to Settings within the Ledger app and make sure all is good there before connecting to Compound Finance. If you do not do this, you'll not be able to deposit DAI on the platform. Next, select the Ethereum wallet with your DAI and a bit of ETH for gas. You'll then see your wallet balances displayed on Compound Finance. In this example, we want to earn interest on our 17 DAI stablecoins. So the next step is to click DAI and you'll be asked to enable this crypto asset. You'll then be asked to accept the contacts on your Ledger device. Once done, you'll see the option to supply DAI. If you're like me and like to take it to the max, you'll mash that max button and click supply. You'll then be able to see your supply balance and the interest ticking up every few seconds. To exit your position, just click the asset you've supplied and hit the withdraw button. It's that simple. Oh yeah, this method will work for any asset listed on Compound. However, I imagine most of you interested in using Compound Finance will opt for DAI because of the significantly higher interest rate. So, you should now have a basic understanding of the mechanics behind Compound Finance and know how to start earning that sweet DeFi interest. However, I want to take a few minutes out to explain why I think that DeFi lending platforms could lead to some insane capital inflows into crypto. In a nutshell, banks are rewarding those with cash deposits with miserly interest rates. Let's pick on HSBC in the UK with their incredible deal of 2% interest if you lock your money up for 3 years. Why on earth would I want to do that if I can go to Compound Finance and get 4 times that interest rate without committing to having my money locked up for years? The point is that there are probably hundreds of millions of people around the world sitting on cash deposits in banks earning almost no interest whatsoever. That's not all. Pretty much every stock market in the world is near all-time highs after the longest equities bull run in history. Yes, these have pulled back in recent weeks due to fears around the economic impact of coronavirus. However, our friends over there at Bloomberg seem to think that over $85 trillion worth of value is locked up in global stock markets. Now, we've got to ask ourselves if the typical stock investor thinks that the risk to reward ratio is still good for stocks. Or does the idea of getting an 8% return on DeFi via lending platforms seem quite an attractive option now? Seeing that we're at it, let's have a look at the global bond markets. According to SIFMA, these stand at $102 trillion. If I hop over to the UK investment supermarket Hargreaves Lansdown, I can see that I can lend the UK government money by buying a treasury gilt. For those that don't know, these are just UK government bonds. The astonishing thing is that I only get rewarded with 0.5% interest per year for bonds maturing in July 2022. Now, let's not kid ourselves. The majority of these assets are controlled by financial institutions and pension funds. However, there is still a significant portion of assets controlled by regular people like you and me. I don't know what you think, but these traditional assets look like a pretty bad deal to me right now. This had me thinking, what would happen if the guy on the street with a few $1,000s lying around knew about the opportunity to make 8% interest per year in DeFi? Could we see a massive surge in crypto's interest among the no-coiners? The problem, of course, is that DeFi is still pretty damn hard to access for those new to crypto. I'd wager that few crypto newbies would be willing to learn how to use MetaMask or set up a hardware wallet, and that's in addition to the effort required to work out how to buy DAI or other crypto assets in the first place. However, the DeFi sector is still very young, and I'm confident that things will become simpler for users over time. All that being said, I've got friends that will jump through an extraordinary number of hoops to get a special 3% interest rate deal. With that in mind, it might not be so far-fetched to think that if we can get the word out about DeFi, your average Joe will start taking a look into it. With the crazy interest rates on offer, it could drive a wave of people to crypto and inject some serious capital inflows into the markets. Well done, chaps, for hanging on in there until the end. I know I've hit you with a ton of information. However, I'd like to have the opportunity to share my final thoughts about compound finance with you. In case you've not guessed, I'm super excited about compound finance and the cracking DAI stablecoin interest rates on offer there. I'm also really impressed with the volume of lending and borrowing taking place on the platform, and I actually really like the straightforward interfaces. I've been thinking long and hard about how Compound could make its lending platform even easier to use, and to be honest, I'm at a loss of what else to recommend. After fully evaluating Compound Finance, I now see why it's the second largest DeFi project in the space. All that being said, I'd love to see the platform support more crypto assets. Another main gripe I have with the platform is the interest rates on offer outside of DAI don't seem that great to me. Sure, 4% interest for USDC and legacy DAI is okay. However, with Ethereum you can only earn a miserly 0.01%, around 0.5% for wrapped Bitcoin and 0.2% for basic attention token. I still think that MetaMask and Ledger are probably too difficult for most crypto newcomers to use. The good news is that Compound Finance's integration with the Coinbase wallet provides a more user-friendly way for those new to crypto to access the lending platform. I've got to say that if there is one area in crypto that I'm super bullish on, it's got to be DeFi. However, it must be stressed that we shouldn't expect a massive paradigm shift overnight. I somehow doubt that traditional finance is going to be disrupted all that quickly. And that concludes my review of Compound Finance. What do you think about the lending platform? Are you thinking about using it to earn some DeFi interest? I'd love to hear your thoughts in the comments section below. Oh yeah, remember to drop a like on this video if you liked it and sub if you loved it. I've been Guy, your crypto guy, and I'll be bringing you even more crypto content very soon. Thanks to all my subscribers for your support. I want to give back to my community, and this is exactly why I run my weekly newsletter. In it, I share everything that I wanted to cover in the videos, but didn't get the time to. I also give you my personal take on the markets, as well as some coins that I have on my radar. Sound intriguing? Well, all you need to do is insert your email address in the simple form that I've linked to below. You may be in time for my next newsletter, which you won't want to miss.